Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on some volatility here, VIX, TVIX, and UVXY. So when I look at this VIX chart, I see we have a tightening range where I can see these clear little higher lows and some lower highs. So what I would do is come down here and draw some trend lines just to be watching a tightening pattern form where I'm making sure no daily candlesticks are closing below my uptrend line and no candlesticks are closing above my downtrend line. And we can see this range is getting tighter and tighter, but we could stay within this range even for the entire next week coming up. So there is no imminent break here of this channel. It's just something that I would be keeping an eye on moving forward. So the resistance I'm looking at in the short term is up here at 1243 and then 1296. And in terms of support, I'm looking at 1146 and 1094. So we can see it's getting tighter and tighter. We've got the FOMC this coming week on Wednesday. That should definitely spike some volatility in terms of the reaction to the market and what is going to occur there from the FOMC. So it's definitely worth keeping an eye here. And VIX on the weekly time frame, we can see it is a bearish trend. Every time we spike, it's a lower high, and we are seeing lower lows. To start 2017, the lowest prices we've seen in quite some time, with 997 being the low. And you can see very clearly upper wicks on every weekly candlestick in 2017. We have no strong closes here on the weekly time frame. So the middle Bollinger Band is resistance, and it's been rejecting some bounce attempts, and we are watching the bears in control. It's going to require a bullish MACD cross, which is close here, but we have to get over this lower or this middle Bollinger Band resistance, which is going to be down around 1260 this coming week. And that will be a key resistance to keep an eye on. So once we do get a strong close on the weekly time frame, that will indicate to be paying attention to a potential change in the short-term trend, because we have been seeing these upper wicks so consistently. But we look at TVIX and UVXY, and I am very bearish on these names just because of the long-term history here. They have time decay, and they are designed to inevitably go down to zero. With the stock market so strong, we are seeing a huge downtrend. And so a lot of people are trying to play puts to the downside as a bit of a consistent play, and that's possible, but you do have to pay for the premium there, and that premium in time decay can definitely work against you. So there are traders that I know that short TVIX and UVXY consistently time and time again, and with you shorting, you don't have to worry about time decay or anything like that, and those gains have definitely been very, very consistent. You look at this weekly time frame for TVIX, and this is the kind of trend that you want to be shorting. Every bounce is short-lived, and we just see lower highs and lower lows, and we are inevitably going down to zero. Where were we a year ago? Let's see, early March. We were up in the 180s, and we keep having reverse splits, which is why the price was all the way up there. But 180s, and here we are down at $4. So essentially, we're looking at a 97% loss in a year, something like that. So shorts are really doing well on TVIX. And looking at this daily time frame, right now we have support. The lowest price we've seen here is $4, and we bounced off of 405. So there is a little bit of a base of support just above that $4 psychological level, but the bulls have not been doing a good job at all in terms of seeing any kind of follow through on a bounce. So we have the middle Bollinger Band resistance. That's at 445 and dropping. The high of the bounce attempt last week was 441. And we're just looking at 405 and $4 before breaking down to new all-time lows. The weekly time frame, we have not seen two green weeks in a row on TVIX since back in October of 2016. So it's been 5 months without two green weeks in a row. Again, you cannot have a more ideal chart if you are a bear. And UVXY is the same thing pretty much. Support here is 1849 and 1864. We closed down at the low of the day. So if we break 1864, we're looking at the all-time low. The middle Bollinger Band resistance here is 2048 and dropping. And the weekly time frame is the same thing. All red weeks. tons of bear volume, closed down at the low of the week, and the bulls have been struggling big time. Look at what we've seen since November, inability to even get over the 4-period exponential resistance, which shows you how strong that downtrend is. So overall, playing TVIX and UVXY bearish at any point in the last year and a half or even longer if we scroll back, but playing it bearish has been consistent gains to the downside. When we do see big time corrections in the market, I'm referring to 2008 and I'm referring to February of 2016 where we saw some upside. When there is a big pullback in the market, we are seeing the most gains in VIX and TVIX and UVXY. And that's compared to pretty much most other metrics. I looked at gold and miners. I looked at playing other than options, other than shorter term options. TVIX and UVXY is the best bet for cashing in on a big market pullback. But obviously, the market is at all-time highs and extremely strong, and there's no weakness in sight. So personally, I would never touch UVXY or TVIX bullish unless we were seeing an all-out market dump with some kind of fundamental catalyst behind it. So that's my opinion. That's where we stand on these volatility indices, whatever it is. And I hope you have a great weekend. Thanks for watching.